Good morning, traders. This is a live trade recap. I took 6 trades this morning, all between 9:30 a.m. and 10 a.m. Eastern time. I have everything on video. Out of 6 of those trades, only one of them went to 2R, but I've since added a rule to my plan because one of the other trades that stopped me out should have gone to 2R, but I didn't enter at the right time, and I'll show you exactly what happened with that trade and what I've added to my plan to keep me from doing that in the future. And if I would have done that this morning, it would have likely been at least a break-even day, which is always better than a red day. So we'll take a look at the trades. As always, I start with my screener. You're looking at my desktop. I have my screener open on my laptop. Don't forget, whenever you use this customized screener in Webull, always click these 3 little dots, hit modify. Otherwise, your filters may not be applied. So you see how the filters move as soon as that pops up. And then I organize everything by volume. And my criteria to look for a trade, I actually lowered the share size, the volume of shares traded to 500,000 shares, because right at the open, you're basically starting with 0. So if you get 500,000 shares traded in the first few minutes, that's a lot of volume, and it builds quickly. And today there was actually so much volume in the mid-cap market that everything on this page had over 1 million shares almost immediately. So it was pretty impressive, and it seemed like the trading was going to be pretty decent. And you never know. That's why you always use stop losses. It actually ended up being a red day. So let's take a look at the trades, and I'll show you what happened. So the first stocks that met my criteria, CLOV, MARA, and X, which is US Steel. And you could see that they were all trading above their previous high. They're all trading above the 200 MA line on the daily chart. So I'm just waiting for pullbacks. I actually missed my first entry right here, but I got in on the retest. And CLOV, I'm just waiting for a pullback on that one. And then X was a little bit weird. It kind of goes into consolidation, and I got in a little bit late on this one, but it wouldn't have made a difference. So let's take a look at the first entry. So what I wanted to do here, I'm hovering over this candle right now. 28.78 would have been the ideal entry on MARA, and it would have been during this candle. The stop loss would have been over here. So if I can get in when the price comes back down to that level and before it hits my would-be 2R target, so meaning, let's see, if I did 28.78 as my entry, and then my stop would be 1 cent below that candle. Actually, it would have been, so this is the beauty of the live trade recap. Oh, no, I'm sorry. This is correct. I thought I screwed up the trade for a second there. So again, I have to remember, I'm getting in on this candle, so the stop loss is the low of this candle, which is 28.49. So the 2R target there would be 29.36. So as long as 29.36 isn't hit before the price comes back down, then I can get in on this retest. So, and that's what happens. Let me fast forward a little bit. So we didn't see 29.36. We came back down, just got filled a little bit high there. Only 4 cents on a stock that price. That's not really a big deal. And then there is my stop loss, 28.49. Let me see. Did I enter that in? Yeah, correctly. So again, here I am using the 2R calculator live during the trade. You can download this from the Facebook trading group by the same name, Trading Armor. Very useful tool. All right, so then my profit target becomes 29.48, and I move my target in place. All you have to do once this order is out is left click on these little bubbles, and you can drag the order anywhere you want on the chart. And that's a really nice feature within Webull. So that's trade 1, and that is pretty much done at this point. I don't have to do anything. It takes care of itself. So I was checking out US Steel here, and I wasn't too impressed with the way it's consolidating, and I thought, well, if it breaks out through this consolidation, then I'll get in, which is maybe just a 1 cent higher entry than if I would have just taken the first 1 minute candle to make a new high, which is right here. So we'll see an entry on that one in a little bit. MARA at the moment looks pretty good, like it's, could hit my profit target. It's going up. CLOV broke out, and then on this pullback, it never really made a new high, and now it's coming all the way back down to point A of the ABCD pattern. So I'm marking out a line there. If it touches, or if it breaks that level, actually, if it breaks down below that level, then I can't look for a trade on CLOV unless it makes a brand new high. And that's just to increase the probability of the trade working out, because if I do that, then I'm going to be trading with the trend, the recent uptrend. So NNDM popped up on the screener. I'm checking to make sure it's trading above its previous high. It obviously is. And once again, I missed the entry just by a few candles, but same rules apply here. As long as it hasn't hit my profit target, I can get back in on the retest of that same level. So here I'm marking out a line like where I would have gotten in. And I always put that line in blue. So 829 would have been my ideal entry. And then the stop loss would have been the low of this candle. And that's how I could figure out where my profit target would have been if I got in at that level. And you can even tell visually, because if this distance here is 1R, 1 times my risk, then 2R would be much, much higher than where the price is right now. So this is me just checking it out while I'm trading. So my profit target would have been 853. Obviously, it's not hitting that level. So if it comes down before it does, then I can get in. And this is exactly what happens. I think at this moment, I was watching some other chart and I kind of missed the entry there. But I got in almost where I wanted to. I think I wanted 829. I got into 833, so 4 cents higher. That's less than 0.5%, or just about 0.5% slippage. Not a big deal. And then again, my stop loss and profit target are in place. That trade is taking care of itself. So that's my second trade. And DDD was on the screener. Pulled that up. It didn't look too hot. This is the previous high, so it was trading below that. So no entries for me to look for there. AA, whatever that is. Maybe it's American Airlines. No, it's not. Alcoa Corp. Same kind of thing. This is just like a really choppy pattern. I just decided to get rid of it. And then NKLA was trading above its previous high. This is the trade that I screwed up on, where if I would have waited for it to come back down to my ideal entry, then and you can see me re-enter MARA a few times here. This one I took a lot of slippage on, but that's part of my plan. Is once I have been stopped out of a stock, I can re-enter it as long as I haven't lost 3 trades overall. I can continue to re-enter as long as I haven't lost 3 trades overall, and as long as the price hasn't come down and gone below point A of the ABCD pattern. And I have a video on that pattern if you're not familiar with it. So, okay, so NKLA, my desired entry was 831 actually. This is a little bit low. So I'm waiting for it to come down. And again, I'm going to check to make sure that my profit target has not been hit. So normally I don't miss entries like this, but when there's a ton of volume, there's a ton of stocks on the screener that meet the criteria, it's pretty easy to miss the entries. If there's just 1 or 2 stocks on the screener that you're watching, it's hard to miss the entries. But days like this, it's pretty easy. So now I'm just waiting for the price to come back down. So it's starting to kind of tease that level. I'm also looking at U.S. Steel is about to kind of break out of consolidation, and I like that, the way the chart looks there. So I was thinking of doing a consolidation play. So this is still like an ABCD pattern, A, B, but C becomes like a consolidation level instead of, just a retracement. So this is a retracement here. So it got very close to that 1831. Oh, I guess this is where I got into U.S. Steel. And I made my stop loss the low of that consolidation level. These are all very low risk trades. Most of these trades had about a 1%, 1.5%. One of them maybe was close to 2% risk on each of them. So this is a good way to test trade. These mid caps offer a lot lower risk than, say, the low float stocks. A lot of those are 5 and 6%. Some are 10 or 12% occasionally. So here you can get into a lot of trades, and even if they all lose, you haven't lost a lot of money. All right, so I've set up U.S. Steel. That trade is all good to go. Now, this is where I kind of screwed up. Well, I'll show you the thing that I added to my plan to keep me from doing this. So that's where I got in. I was thinking, all right, this is pretty good. It's pretty close to that 1831, but I don't think I ever actually saw 1831 on that bubble. Let's watch over here, the red bubble, 1834. That was where, you know, in the moment I thought, okay, that's close enough. 1834 is close enough. And really, it's not far off. I mean, there's a good chance that, say I was trading this back here and I saw 1831, I may have gotten filled at 1834 or 1836. But the point is this trade ended up losing, and then I felt kind of stupid for not waiting until it came back to 1831, because it did come back to 1831. So what I should do in the future, I wrote right here in the plan, this is my screener criteria, but let's go up to the thing that I added. If you miss an entry and your would-be target or stop has not been hit, you can only enter if the price comes back to your exact entry on the penny. So what that means is that I would have had to wait until I saw 1831, then trigger my hotkeys and hopefully get filled where I want to. I may have gotten filled slightly lower, may have gotten filled slightly higher, but at least in that case, in that scenario, I did my best to get the exact entry that I wanted. And then if the trade fails, I could say, hey, look, I did everything I could to give me the best chance of that trade winning, and that's all I can do. Here, I was a little bit aggressive getting in before the price came back down to 1831, and I paid the price for it because the trade ended up losing, and this trade would have hit the 2R target had I got in at 1831. So that's the big lesson there, and that's what would have made this day a break-even day, which is always better than a red day. So now we're just going to watch these things play out. I was pretty surprised, you know, that so many of these trades failed, but you know, that's the thing, is you never know. You can do everything right. You can have a nice strict screener criteria, be trading safer mid-cap stocks. The market looks not that great today, but not terrible. It's kind of choppy sideways. But again, we need direction to trade off of, so maybe that's a good reason why these trades failed. But it doesn't really matter. You can only trade your plan. Always use your profit target and your stop loss, and if one or the other gets hit, you just let it be. You don't try to manage the trade once you're in it. You just stick to the plan, because believe me, for many months, I would manage these trades. I would try to decide once I was in them, okay, is this going to hit my target, or is it likely going to stop me out? And if I felt like it was going to stop me out, I might exit early and take whatever profit I could. And then a few minutes later, it would hit my target, and now I left a bunch of profit on the table. And the problem with that is then the next trade that you let go all the way down to your stop loss wipes out all of your gains, and you end up red in the long run. Happened time and time again. So, and I was actually tracking, well, what if I would have held to the profit target on these and held the others all the way to their stop loss? I would have been green on those months. So this is actually, you know, proven data over many, many months of trading. I've been trading over a year now. All right, so this is me adding that into my plan. So just scroll through these, lots of trades. So NNDM, this is the one trade that worked. And again, here's why you don't judge your trades and try to manage them once you're in it. This trade didn't look too hot either. This was the second trade that I got into, and it's still going all this time, and it's just kind of moving sideways. So if you were someone who manages your trades, judges your trades once you're in them, you might have said, you know what, let me just get out of this thing now while I'm in the green. I just lost 5 trades. Let me at least make something. And what would have ended up happening is you left a lot of, well, first of all, you broke your plan, which is really bad. If you're not trading your plan and you're not sticking to your plan, you're just gambling. You don't know what you're doing. You don't know if what you're doing works. So the best thing to do, no matter what, no matter how the day's going, is just stick to your plan on every single trade. And that's what I did here, NNDM, and eventually it broke out and shot up and hit my target without too much trouble. So, and I kind of figured that once I saw this big green bar, I saw this 841 level, I thought, okay, if it breaks out over that level, there's a good chance that my target could get hit. But I'm just kind of telling myself that for fun, I guess. I'm not going to change anything with that knowledge, you know, that, okay, maybe I should lower my target for the breakout of 841. No, I'm just going to keep my target exactly where my 2R calculator tells me to keep it based on where my stop loss is. Okay, so I just fast forward right through the breakout. So let's see, here's 840, then it breaks out over that 841 and starts to shoot up higher. That's probably because a lot of short sellers had their stop loss there and they got squeezed out. And now this thing kind of hovers around this 850 level. It goes all the way to 860. And again, it kind of hesitates there. And many months ago, I probably would have said, okay, this thing's not going to get any higher than 860. And my profit target is 865. That's close enough. Let me pull the target down and just get what I can here. Don't be greedy. That's a stupid thing to say. What you should be saying is just follow your plan. This is not about greed. It's not about fear. This is about a plan. It's about risk management. And if, after a long period of time, like I'm testing 100 trades right now, after these 100 trades, if I'm red, then that means there's something wrong with my plan. There's something wrong with my risk management. And I'll know that because I stuck to the plan. But if you start managing your trades, pulling your profit targets down, whether you're green or red at the end, you're not going to know why. You will know why, but you won't know if it's because your plan or not, because you didn't trade your plan. So you got to stick to your plan. So here we go. You can update the plan as needed when you see errors or something new happens that you weren't anticipating, and then you can modify the plan. But it should always only get stricter. It should never get more lenient. So that NNDM trade worked out. That was the last trade that I was in. I had lost 5 trades. I didn't let it get to me. I just let the NNDM trade play out, and I finally got a 2R trade there. So at least in that sense, it was a successful day. We'll take a look. We can look at the Webull account. I have my SPXL trade going, so it's going to show. Okay, it's showing. They must be pulling back a little bit because it's been showing green all day. But we can look at just the trades from today. Where are we here? June 23rd. And then I'll show you on the spreadsheet as well. So down 15 cents, not a big deal. So this is SPXL is green for the day. And then here's my NNDM trade. And then these are the other, this is the thing. If you just look at your PL, it doesn't show you the total number of trades because on MARA, I think I had 3 trades total. So after 3 losers, I only lost 98 cents. That's the beauty of trading one share, doing test trading. You can take a bunch of trades and still not lose a lot of money and not hurt your account. And that's really important. In the beginning, you should just be collecting data, not trying to make money. So let's take a look at the spreadsheet now. You know what? I didn't complete it all. I did enter in all of the price information, but I didn't pull down the formulas for the risk. But here you can still look at all 6 trades and see the data that I did collect, my entries and my exits. And so today we have a win rate of 16.67%. Again, that's only 1 trade away from break even. And had I traded NKLA properly, according to my plan that I updated today, then it likely would have been a 33% or break even day. So it wouldn't have really made a difference. And look at this. We've already taken 14 trades. We're only down 82 cents. That's the beauty of test trading one share. And that's not reflective of really what if you multiply that by some factor of how many shares that I'm going to be trading when I trade full position size, the P&L is not really reflective of that, whether it was red or green, because when you're just trading one share, the difference in price can really kind of screw up the way the P&L looks. So that's why when you're doing this one share test trading, the win rate is the only thing that you should be looking at, and you calculate what win rate you need in order to be profitable based on your risk management. And for me, it's 33% is going to be break even. Anything above that is profitable. So right now, after 14 trades, we are slightly below profitable. And then that's just the average of these numbers, and the average of all of the trades is again about 29%, so slightly below break even and without any errors. So this is a reflection of the plan itself, not me. It's 40%. So the plan is still profitable, but with my errors and maybe things that were maybe wrong with my plan on a few of these trades, it brought it down below profitable. And then the average of all these 3 numbers, which may be more realistic in the long run, is about 34%, so that's a profitable win rate. So anyway, this plan still shows a lot of promise to me. We're still very early on. We need to get to 100 trades before we know this thing is profitable or not. So a lot of work to do, and so far so good. I'm happy with the way things are going so far. So anyway, let me know if you have any questions about these trades or this plan or anything about Webull, and I'll get back to you in the comment section. As always, whether you're test trading or trading with real money or paper trading or trading options or whatever, go into every single trade with a plan. Stick to it no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.